CME Group to launch BTC, ETH reference rates aimed at Asia's investors. CME Group to launch BTC, ETH reference rates aimed at Asia's investors. CME reported nearly half of its crypto volume year-to-date came from non-US trading hours and around 11% from the Asia-Pacific region. Derivatives marketplace CME Group is launching Bitcoin and Ether reference rates for the Asia-Pacific region, in another sign of growing institutional interest in crypto from Asia. On August 16, derivatives marketplace CME Group said it's partnered with crypto indices provider CF Benchmarks and on September 11 to launch the two Asia-Pacific-focused crypto reference rates. Reference rates are used as a credible source of a cryptocurrency's price and are used, in CME's case, to price settlements of crypto futures contracts. CME Group said from September 11, Asia-based crypto institutions and investors will get two reference rates that will track BTC and ETH, which will be published once a day at 4 p.m. Hong Kong time. CME Group has existing reference rates for the two cryptocurrencies, but they are published at times more suitable to investors in New York and London's time zones. CME's crypto products head Giovanni Vicioso said so far this year it's seen 37% of its crypto volume traded during non-US hours, with 11% coming from APAC. These APAC reference rates will allow market participants to more accurately and precisely hedge cryptocurrency price risk with timing more closely aligned to their portfolios, Vicioso said. Matrixport head of research Marcus Thielen told Cointelegraph the reference rates show that CME is seeing increased demand from institutions requiring accurate BTC and ETH prices during the Asia trading day. Institutions will use the daily price for investor products, which he believes could now see greater demand from the end investors of those institutions. CME and CF also has reference rates and real-time indexes for the metaverse-related tokens Axie Infinity Shards, Chillers, CHZ, and Decentraland. The firm's other reference rates aggregate crypto spot exchange trade flows including from Bitstamp, Coinbase, Gemini and Kraken and aim to provide a credible reference price. Such rates are used in the settlement of futures contracts including CME's Bitcoin and Ether futures products, which settle on its London time reference rate. Institutions have been eyeing crypto-friendly jurisdictions such as Hong Kong and Singapore, two regions that have made significant moves to give regulatory clarity to crypto businesses. Europe's first spot Bitcoin ETF is going live. Europe's inaugural spot Bitcoin ETF is going live on Euronext Amsterdam. Jacobi Asset Management launched the Jacobi FT Wilshire Bitcoin ETF, a green-friendly digital asset fund. It aligns with the EU's sustainable finance guidelines, highlighting its focus on positive environmental and social contributions. Jacobi initially hoped its Bitcoin ETF would launch in July 2022, meaning it's been over a year since the originally planned debut. The ETF, trading under the ticker BCOIN, is overseen by the Guernsey Financial Services Commission. Fidelity Digital Assets handles the ETF's custodial duties, Flow Traders ACTS as market makers, and both Jane Street and DRW serve as authorized participants. The fund secured an initial capital investment to kick off operations on August 3. Jacobi's CEO Martin Bednall told Blockworks. The asset manager has added a verifiable renewable energy certificate, REC, to the ETF, developed in collaboration with digital asset platform Zumo. Bednall said the fund employs external data to measure the energy usage linked to Bitcoin, BTC, in the ETF. Jacobi then buys and retires corresponding renewable energy certificates, RECs, a recognized tool for buying green energy. Proof of these RECs is digitally logged on a blockchain, allowing ETF investors to verify the eco-friendly assertions. The fund's reference is the FT Wilshire Bitcoin Blended Price Index, which calculates a real-time average Bitcoin price using data from vetted exchanges. A spot Bitcoin ETF directly holds Bitcoin, letting investors tap into its price without directly buying or handling the cryptocurrency. A futures-based Bitcoin ETF focuses on the futures market, which comes with its own set of challenges and risks. Though this is the first spot Bitcoin ETF in Europe, there are a series of crypto exchange-traded notes, ETNs, available on the continent, offerings that fall under the broader exchange-traded product, ETP, label. Bednall argued during an interview with Blockworks in July 2022 that ETFs are superior to the ETNs currently on the European market. While ETNs are debt instruments typically collateralized by the underlying exposure, such as Bitcoin, he noted at the time, Jacobi's ETF holds Bitcoin directly. While U.S. regulators have approved futures-based Bitcoin ETFs, they have thus far rejected numerous spot Bitcoin ETF proposals, voicing concerns about potential market manipulation and fraud due to insufficient trading surveillance. It is exciting to see Europe moving ahead of the US in opening up Bitcoin investing for institutional investors who want safe, secure access to the benefits of digital assets using familiar and regulated structures like our ETF, Bednall said in a statement. Bitcoin and Ethereum now less volatile than oil. Bitcoin and Ethereum now less volatile than oil. The financial and market information provided on You Today is intended for informational purposes only. James K. Phelan, a former federal prosecutor and Ripple enthusiast, shares the latest update in the Ripple SEC lawsuit. Per the update shared by Phelan on X, formerly Twitter, the court has set a briefing schedule for the SEC's request to file a motion for leave to file an interlocutory appeal. Phelan explains that this does not mean an interlocutory appeal has been authorized. It just means the SEC is allowed to request it. The latest update in the Ripple SEC lawsuit has attracted varying reactions from the crypto community, as some took it to mean that the SEC has been allowed to file an interlocutory appeal. XRP Holders attorney, John Deaton, is not so surprised at the latest development, having earlier predicted that the judge would grant the SEC the right to file a formal motion for an interlocutory appeal. Explaining that the SEC would file today, August 18, Deaton stated this was just a pre-motion letter and not the real motion. He explained further, comparing it to a pre-motion letter he filed asking permission to file a motion to intervene in the Ripple lawsuit. Deaton added that the fact that the pre-motion letter was granted does not imply that the underlying motion will be granted. He hopes that Judge Torres will refuse the SEC's formal motion for an interlocutory appeal, allowing her to explain why she did so and underscore why the judge in the Terra case was incorrect in his interpretation of what she ruled. The crypto law founder projects that her ruling will take another 3 to 6 months. In a throwback, on August 9, the SEC filed a letter outlining its basis for filing a motion for leave to file an interlocutory appeal regarding programmatic offers and sales to XRP buyers over trading platforms and other distributions. The SEC also sought a stay of all proceedings pending appeal. On August 16, Ripple fired back by submitting its opposition to the SEC's anticipated motion for leave to file an interlocutory appeal. Ripple executives Brad Garlinghouse and Chris Larson also responded in opposition to the SEC's request to file an interlocutory appeal and for a stay of all proceedings pending appeal.